Good morning. Welcome back. All right, so we're getting this breakdown bar failure pattern that we talked about last week. We had the wide range bar down, breakdown bar, and the inside bar. And yesterday, prices got above that. And so we'll see where things are at. You see that gapping above when we get to SPY. It's inching up here into the wide range bar, and it's got a void above, which suggests it's pretty much got clear air, a void to continue to move up there. Certainly doesn't mean it has to do it, effortlessly and go up there. And typically on a turning point, there's always this hesitation, meaning as prices come down as they did here, or in any downtrend, and they get extended, where it begins to make the turn, there's always an apprehension about the counter trend move, regardless of what the pattern is, because things were consistently going lower, and everybody, traders are going to be skeptical of a move up. So while it could easily get up there within the next day, today, maybe tomorrow, we might have more type of choppy price action before we start to see some type of momentum kind of a move to the upside into that area. And of course, as it gets up there, the more difficult it becomes to get beyond that. So we'll see how far this goes. You got these overlapping highs up there, which you can see right there. And we go to the hourly chart. Let's drag this down here. That's where I would say the heavy lifting begins. But now that it's formed this bottom, it should be able to get up there. Now we got this overnight lows. We see that's pulled back to there. A little bit of a deep retracement in front of the open. So I wouldn't be surprised to see a little extra selling here at the open to test some lows area and see if buyers want to show up there again. We went over the internals last week. Let's reset that and talked about the fact that these were in alignment and why the thought of this potentially being a breakdown bar failure pattern. It's one in which you get a couple of sideways bars. It breaks down, you get an inside bar, and then prices trade above the high. So we'll see where things are at here at the open. Still got 20 minutes or so to go, whether it actually is gapping above that or up there to it. But it's a good start to beginning to attempt to move up into the void above. And we'll see how that plays out. You got the internals alignment with that. Let's take a look at other markets. Let's look at spiders first, SPY. So just to assess the gap, which came up to almost about 373, give or take. And so my crosshair showed, it's at 371, as you can see. So it's still gapping above the prior day's high, which is good, and up at that next bar, right, the 16th resistance. So, it got up to about there. Look at the hourly chart. Now it's around here at the top of that congestion, and we begin to form a little trading range to see if prices come back in, they stay within the range. Ideally, doesn't pull back more than 50% into the range. And then once it can get back up here to the pre-market high, get through it, it should be able to move up into this void. Some of you might be thinking, what about this over here? Well, we have a rule for that, is that if prices traded above and back down below, I look at it as being neutralized, and essentially like it's not there. You can say, well, how could that be? It's there, Greg, I see it. Well, just for years and years of observing price action and seeing how patterns like this can just go up through here as if that's not there, and wondering how is that possible? Because, we're taught, look over here, and where's resistance, and what was support becomes resistance and all of that. So then how does it get through that? Well, I had to come up with a rule. And the rule is if it's traded above and below, it's neutralized. Doesn't mean everyone else isn't looking at it, but the probability of this pattern going up into this area, as if that isn't there, historically is very good. So again, if we see prices opening up, you see they're holding here, and they can get through this level. We'll see if they start trending higher. Does the number of days time play into this, meaning more sideways? No, Robert. I mean, we're looking at an hourly chart. So the thinking behind this is it's been used as a reference point by trading above and below. So, before this formed like that, and we see this is in a downtrend, and it's at whatever it forms. We don't know it's going to be a pivot, if we're looking at it like that, because it doesn't have 3 bars to the right yet. But once it comes down and tests it at support, and it goes back up there, and then it came all the way back down again. We'll see how it plays out, but we have to have a bias based on the patterns that we see. So after looking at these type of scenarios in the past and being hesitant about, hey, can it really push up with this being there, and seeing how prices did go up as if that didn't even exist, and having to look, not only a trader, but actually as an educator, how do I communicate that to those that want to learn? Well, I can just say, oh, just ignore it. It's not there. And they're like, really? Why? So you have to have a rule. So from an educator point of view, you have to have some kind of rule that explains the theory and the thinking behind that. And it's because it's been used up as a reference point. And so the rule is if it's traded above and back below, it's been neutralized. We all see it. It's not like we can say, hey, just ignore the pink box that's sitting over there, right? The pink elephant type of thing. You're not going to ignore it. But after you watch this for a while and you see how the price action is, and that's how you gain confidence in the theoretical by actually seeing it unfold. So pointing it out was the same way as last week, pointing out on this day, I said, look, I don't know what's going to happen, but this appears to me historically like it's going to be a breakdown bar failure. And, this wasn't an inside day, but you see there's plenty of patterns out there that look like this breakdown and then the inside day, and now they're trading above that. And so while this is still in a downtrend and still of a bias that eventually this should be able to go lower down to here, based on our internals and this pattern that we have right now, some type of counter trend move bias is a reasonable bias to have right now. So we'll see how far this goes. Now, what would change our bias that this, at right now, that this is going to go down here? It would have to have some kind of really monster rally that goes deep into this void. And we're not thinking anything like that yet. Now, if today was to unfold and it gaps up and we have a big monster green bar that pushes up into here and it holds there at the end of the day, well, that piece of information now suggests to us there is the possibility of going up into this area. But we don't have that yet. Just like last week, and if you read the newsletter this week or the videos, Dan and I both communicated, look, we have these internals, we have these moves down, but for the moment, we don't have any pattern. And we wanted to see if today would unfold with this breakdown failure, or would it just continue the move down regardless of the internals? So now we've got the beginnings of a turn against the downtrend on multiple time frames, and we'll see how this goes. How far away from the 20 MA will we go? Well, Frenchie, what time frame? This is pretty far from the 20 MA when you look at the daily and you look at the weekly. It's pretty far from the 20 MA. it's further here than it was here. That created, this counter trend move. And I'll tell you, I've created, scans like, you see when Dan and I do MT Live and you see these scans. I've created scans that had a percentage from a 20 MA. And while that's a starting point, I really didn't see consistency in a specific number that would create rallies. It becomes more of a visual thing as to, how fast do prices move. Like here, this moves very rapidly. That's what creates the void. And here, two big bars rapidly. And here on the hourly chart, as it moved down, it's not far from the 20 MA at all. So again, it depends on what time frame you're looking at. And so we look at this as common sense. Right? It's not just one piece of information, how far from the 20 MA. Visually, that's far away. It's further away here than it was here. This formed a little retest pattern. Right? It's further away here than it was here. Does that mean it has to rally? No. You need a pattern that suggests it can turn, and that's what we have now. It could have went down another day and gotten really far away. So, you got the gist of it. All right. So I got a mark here where this is. Let's look at SPX. And so we got, it's up around here. It can get up into here. As far as a put spread, Jacob's got 36.20. I wrote down, you hit 25. So you want more premium. I've written down 36.20 and 15. I'm always going for less with a greater probability, but 36.25 I think is a reasonable reference point because it's below these lows, and I don't think it's going back down there. However, just looking at, let's go back to the futures. So, they're flip-flopping around over here. Kill this green. We don't need it anymore. Should we see this dip at the open for whatever reason, I still of the bias of buying an intraday dip. And even if it comes down here to 3,700, the futures, there's a little congestion there, look to be a buyer. And if that's the case, you probably go to 36.15 and it'll have the same premium, or could have the same premium as what 36.25 does right now. So, and let's see what it does here at the open. If it looks like it's going to go up, 36.20 or 25 should be fine. It gets further away. Sometimes you wait more time and things get going and the premium just evaporates. So you have that balancing act as to you're picking your entry point. So the Qs have similar pattern. It's been grinding up, overnight and started over the weekend. And this green line is meaningless at this point. It should be able to go up there. And this 11,000 was our downside target area. And this was down here, already down to this congestion area from 2020, which a lot of other markets or stocks look like where they could go to, because that's a significant support over there to the left. Dow down into this area, closed below 30,000. It's coming back up. So we'll see, similar patterns. We'll see how it all unfolds. It's got the same void, same intraday pattern on the hourly chart, deep retracement. So a little bit of weakness here in the last couple of hours. Well, Russell getting closer to that reference point down there, 1,600. The congestion over there to the left. As most of you probably know, Bitcoin had a dip over the weekend, and it's a little bit of a scary moment under 20,000, and it's just stabilizing here. I'm a little surprised that it's not doing better, but keep an eye on that. And Dan's pointing out was 17 and change on, I guess that's the whatever's trading on those exchanges. I don't know if these futures were trading at that time. Russell rebalancing in July. Okay. Crude oil, big back off here, pullback. So a little bit of a inflation subdued, I guess, just a reprieve for the moment. Silver, just going nowhere, but bottoming out there, and had that big nasty reversal day, pretty craziness. And a good example of looking to the left, even coming down as hard as it did. Buyers stepped up there, and 5-year holding for the moment. You want to keep an eye on see if this begins to pull back a little bit. Just having a little thumbnail of the 10-year to see which way it's going. It's pretty neutral here. But look at maybe the energy stocks have a little bit of a bounce after the clobbering that they got last week. Just down here, coming down to this pivot low. And Dan, this may be an idea for, even though it's the end of the week, a put spread on XLE, if there's some juice down here, or maybe some of these stocks that came down real hard. All right, and Dan's telling me in XLE from last week, you're usually not that aggressive. To do that before a turn. All right, and gold. The dollar. What's the dollar doing? Not doing much of anything. All right, so there you have it. We have this gap up, the makings of a breakdown bar failure. We'll see how it deals with initial resistance, and if it can get up into that void over the next day or two. To you, Dan.
Good morning. Yep, great market review. Made my job easier here. So we were looking for this turn. We were just looking for a potent reversal. We knew it could happen any day. So yeah, I mean, we have a ton of CLIMOs, of bullish patterns. We actually in the letters had a bunch of bearish ones too. There's a lot of bear 1, 2, 3s, believe it or not, and they're not going to trigger. So here's one, car, gapping up a little bit, fine, but with a $400 or $500 Dow market gap, if this thing takes out the low, something's wrong with it. So I haven't had any alarms go off, believe it or not, long or short. So we're doing good. Things, we'll just let them play out. But yeah, XLE, this is what we call regardless of where it opens, up, down, or sideways, a pattern like this, the biggest red bar after multiple fluid bars on volume on support, wherever it opens, 30-minute high, long bias. So yeah, that's in the letter. That was the best looking. Well, XOP can work too. And they look like nice day trade setups here with the gap over all this resistance. This Wednesday, we're talking about trading gaps, and that's a fantastic example right here. You got bullish daily, you got gapping over this end of day base, 2 pivots, price void. That's a great day trade. There's another one I put from AMD here. Just a different daily, obviously, but for a gap trader, look at this gap over all this resistance with a price void. So AMD looks fantastic. If the market you know, wants to get some juice, you know, target 85, 86, day trade. So yeah, with Bitcoin being down, the usual, I'm sorry, being up and bouncing, we'll look at the usual suspects. Mr. I did put coin in the put spread. There's a number of these, you know, I just call them reversals and support. So coin has really big shoots too. So this one, coin looks great. Boeing. Yeah, the only problem with Boeing is it's up 4 bars near resistance, but you know, John, you're in the green room with us. I've been pounding the table on this weekly W with a new low plus, target 150. But the problem is getting on the daily. So the concept of multiple time frames is what's making that tough. Len had earnings. The home builders have gotten slammed. Look at XHB. There was an interesting comment in Barron's, just fundamentally speaking. Some guy said, oh, it's, you know, back to the 15 PE, whatever it was. I put it in the weekend letter, whatever he said, but, you know, at least fundamentally it's in a much stock prices are in a much better area. So I scan the whole housing sector. Look at little Beezer here. Now the monthly can go lower. Look at the Corona low and under $6. And that's a nasty crack, all time frames. But for swing traders, it's a climb up. It's a climb up. So, you know, little gap here. This one maybe 30-minute high, I like. Hold. Yeah, I know you mentioned that last week. Thomas, I said I like the pattern, but you just have to know what you're dealing with under the hood. But it's a nice bottoming pattern breaking out. Okay, they're spinning off some stuff. Put this in a window. Do you like that fundamental description, McGraw? Some fundamental stuff. Spinning off their toasty grams or whatever the heck they're doing. Who cares? But it's a nice gap. A beautiful major support. Looks good. PLD. You like fundamentals, but there's no pattern to me is the problem. Thomas, I saw a couple EVs gapping, and this one at least rested on Thursday, and it has a void. The problem is it's still up a lot. But yeah, we can scan EVs. CLI, I've been watching for a couple of weeks, but it's just no brainer pattern. Musk back in the news. There was an article in the journal about layoffs again. You know, not crazy about that pattern, but I like Amazon. Amazon sees a bullish turn on support, gap up. This could be a day trade also. You got the stock split, so you're not dealing with a $2,000 stock anymore. So the FANGs, I like this as a put spread and 30-minute high day trade or whatever. We'll watch an entry. But yeah, I'd much rather prefer a pullback in the broader markets than you know, trying to do a 5 or 10-minute high. HSBC had a big gap, but this is an ADR. They're very gappy. This BGNE, I see 1 or 2 prints up here, but if that's real, McGraw, this will be a no-brainer put spread for us. That's I don't even know if it's optionable or if there's. It's a ADR also. Yeah, the spreads are asinine. 10 cents by 3.90, 90 cents by $5, but we'll come back to it. ACAD, this looks like the biotech disaster of the morning. Look at that. $20 down to 13. That looks horrible. NT's had some type of news, but that looks lower. So 30-minute low. If this can't bounce, that's a day trade short. JetBlue in the news again. They're trying to buy this piece of junk airlines, Spirit. $23 bullish gap. We've been selling puts on this over the last couple of weeks. Just kind of using that, the buyout as a little bit of a floor. Jets got creamed lately, but see, Jets is a Climo. That's another nice Climo right there. All right, let's keep an eye on Jets. And the cruise ships have been beat up too. I'll keep more of a, I like the pattern of Jets here better. But well, cruise ships too. These are all Climos. There's Climos all over the place. And so I'm definitely bullish for a bounce here. We've been saying it. Look at XLU. Utilities is another Climo. FedEx, I would have put this in as a put spread, but it has earnings this week. McGraw and I actually did a put spread on this news gap up. Look at UPS, the sister company, been lagging. This is kind of a pattern. You could trade up or down. A Goldman alarm just went off. Goldman, HLF. Ticked over 1,500. Wow. All right, so Goldman, 5-minute highs a go. HLF. This was a bottoming pattern. I don't even think we have to wait 5 minutes. This looks fine. All right, the weekly options trader, we also gave Goldman. So Goldman, we can just do now without also waiting. I don't care about it. Goldman's a go. Amazon, this could be an absolute home run day trade and swing trade. Let's see, Amazon, I said over, okay, all right, my alarm didn't go off. It's over 107. So Amazon's a go. They're a go if you get filled with the posted spread limit. So coin 55.66.